Welcome to The Explainer. I am so thrilled to have you here with us today. If you love taking complex business data and breaking it down into clear, actionable insights, well, you are in the exact right place. Today, we're unpacking the sheer momentum behind RTX's Q2 2026 earnings report. We are going to take the raw data directly from their financial releases and give you a crystal clear breakdown of this impressive double-digit growth they're experiencing. We'll look at the numbers for sure, but more importantly, we're going to uncover the story those numbers are telling us about the current state of global aerospace and defense. So let's just get right into it.
Okay, let's dive into this. Here is our roadmap for today. Number 1, the Q2 2026 highlight reel. Number 2, inside the three segments. 3, operational wins and innovation. 4, a record-breaking backlog. And finally, number 5, the upgraded 2026 outlook.
All right, Section 1, the Q2 2026 highlight reel.
$24.7 billion. Just take a second to wrap your head around that. That is the reported adjusted sales figure for RTX in just the second quarter of 2026 alone. What you really need to take away from this isn't just the sheer, literal size of that number, but the velocity behind it. This represents a massive 14% increase over the prior year. In the world of mega-cap industrial and defense contractors, hitting a 14% top-line growth year over year, that is absolutely huge. It tells us that demand out there is incredibly strong, and more importantly, that RTX is successfully converting that demand into actual, tangible revenue.
But hey, as we all know, sales are only one piece of the puzzle, right? We have to talk about cash. RTX generated $2.9 billion in free cash flow this quarter. To put that into perspective, remember that free cash flow is the cash a company generates after covering its operating expenses and maintaining its capital assets. It's literally the lifeblood of any business. So generating $2.9 billion in a single quarter really shows you the fundamental underlying health of RTX's operations. It gives them the liquidity to do things like pay dividends, buy back stock, pay down debt, or invest in cutting-edge new technologies.
Now, to really grasp the quality of those sales numbers, we need to look at organic sales. And RTX reported a whopping 16% organic sales growth. Just as a quick refresher, organic sales basically measure the change in revenue when you strip away the distractions, things like foreign currency swings or the buying and selling of businesses. So why does this matter to us? Because 16% organic growth means the pure underlying business is expanding rapidly all on its own merits. It's a true reflection of just how incredible market demand is right now across their commercial aftermarket and defense portfolios.
Moving right along, Section 2, inside the three segments.
Now, what's really interesting about this is how beautifully balanced the revenue is across the board. We've got Collins Aerospace at $8.21 billion, Raytheon right there at $8.27 billion, and Pratt & Whitney taking a slight lead at $8.89 billion. Think about it. You have commercial aviation components with Collins, critical defense and missile systems with Raytheon, and advanced engines with Pratt & Whitney. It's like a three-legged stool, and it's incredibly stable. No single segment is forced to carry the entire weight of the company, which is honestly a textbook example of effective diversification in action. And you know what? That balance translates directly into cold, hard profit. Check this out. While Pratt & Whitney had the highest overall sales, Collins Aerospace actually led the pack in profit, pulling in $1.37 billion with a very healthy 16.7% margin. Raytheon followed closely with $1.04 billion. This kind of operational efficiency across all the different segments didn't just boost the bottom line. It helped drive a very significant 21% growth in overall adjusted earnings per share, landing at $1.89 for the quarter. So they aren't just selling more, they are operating highly profitably. Okay, Section 3, operational wins and innovation. Let's step away from the spreadsheets for a second and look at the real-world milestones making those financial results possible. First up, RTX more than doubled their first-half output year over year for Raytheon's critical munitions. Ramping up output velocity like that in heavy manufacturing is incredibly rare. It's basically the industrial equivalent of turning a cruise ship on a dime. Second, Collins Aerospace was tapped to deliver mission autonomy software for the U.S. Air Force, which really cements their role in next-gen digital defense. And third, over on the commercial side, Pratt & Whitney's GTF Advantage engine officially received aircraft certification, completely clearing the runway for future deployments. And this next point is absolutely crucial because it brilliantly illustrates the strategic advantage of RTX as a combined entity. They're actively using a Pratt & Whitney engine to develop a longer-range variant of Raytheon's Stormbreaker effector. This is synergies in action, plain and simple. RTX isn't just acting as a holding company for three separate brands. Actually, they're combining the propulsion expertise of Pratt with the defense capabilities of Raytheon to create entirely new, superior products. That kind of cross-segment innovation builds a massive competitive moat.
Which brings us to Section 4, a record-breaking backlog.
$289 billion in total company backlog. That is a staggering amount of secured future revenue. As we can see, we're looking at $170 billion in commercial orders and $119 billion in defense orders. So think about it this way. If the commercial airline industry happens to hit a cyclical downturn, that massive defense segment provides a substantial cushion, and vice versa. Having a balanced backlog like this, it's the ultimate shock absorber for the entire business.
But here is the real kicker. It's not just the sheer size of the backlog. It's the trajectory. That backlog is up 22% year over year. In this quarter alone, they booked $43 billion in new awards. And to tie this right back to current global events and demand, nearly $20 billion of those new awards went straight to Raytheon. This unprecedented influx of defense contracts essentially locks in Raytheon's revenue pipeline for years to come, which provides incredible visibility for both investors and analysts.
Finally, Section 5, the upgraded 2026 outlook. So, what does this all mean for the rest of the year? Well, check out this jump. The previous 2026 adjusted sales guidance sat between $92.5 and $93.5 billion. But now, the upgraded guidance leaps to a range of $95 to $96 billion. We are looking at a very significant multi-billion-dollar upward revision in expected sales. This isn't just some minor incremental tweak. It's a bold statement that RTX is executing on its commitments and expanding its capacity fast enough to pull even more revenue into the current fiscal year.
And it's not just top-line sales getting a boost either. Expectations for organic sales growth have been bumped up to between 8 and 9%. The adjusted earnings per share target, that's now raised to between $7.10 and $7.25. And remember that crucial metric we talked about earlier, free cash flow. That is now projected to hit between $8.5 and $8.75 billion for the full year. So growth, earnings, and cash flow have all been revised upward across the entire board.
To really sum up this whole momentum story, listen to what RTX's chairman and CEO, Chris Callio, had to say. He stated, RTX is exceptionally well-positioned to drive continued growth as we execute on our backlog, increase productivity, expand capacity, and introduce new technologies to our customers. I love this because it perfectly wraps up all the quantitative data we've explored today in a clear layer of confident executive leadership. The game plan is simple. Fulfill that record backlog, streamline the operations, and keep innovating. Now, before we wrap up, I want to leave you with something to chew on. We just saw that RTX is projecting up to $8.75 billion in free cash flow for 2026 alone. So the big question is, how exactly will RTX deploy this immense capital to fuel its next era of innovation? Are we going to see more aggressive stock buybacks, increased dividends, or maybe some massive strategic investments into next-generation aerospace and defense tech? When a company is generating cash at this kind of scale, the future possibilities are honestly fascinating. Thank you so much for joining me on this explainer, and keep learning.